So I want to welcome Alex Morsing from Equivesto. How you doing, Alex?
I'm doing great, Craig. Thanks for having me.
I'm excited to be here. I think this is the first discussion in the new year, so it's been a while. And we're talking about the exempt market today. And I have to be honest, I had to do a little research myself. Understanding the basics of what an EMD does in our area, I didn't understand what an exempt market dealer does potentially outside of the startup field. So I just wanted to do a little research there. Why don't I throw it over to you?
Sure. Today, we're talking about what is an exempt market dealer, which is what Equivesto is licensed as, specifically a subsidiary of the parent company Equivesto Inc. Equivesto Canada Inc. is licensed as an exempt market dealer. So we're talking about, what it is to be an exempt market dealer, what an exempt market dealer does, why exempt market dealers exist, and how you can become one, and the ways that we exempt market dealers protect investors and others. Um, yeah, so as I was just saying, here's the agenda. We'll also talk about some roles of employees at exempt market dealers. So let's just dive right in with what is the exempt market. So the exempt market is essentially private investments that are not available on a public exchange or a stock market. So when we use the word exempt, we're talking about the fact that these investments are exempt from the requirements of listing on an exchange, and specifically exempt from the requirement of providing a prospectus. So whenever a company lists on a stock market, goes public, or is available for public investment, it needs to prepare something called a prospectus, which is a multi-hundred page document, usually prepared with support from an investment bank. And there's all these different requirements to being a public company. It's quite onerous. And so any investments that are being made in companies that are not providing a prospectus, those investments are being made in ways that are exempt from that prospectus requirement, which is why it's called the exempt market. So if your brother's ever started a startup and has asked you for a couple $100s to get going, that's actually an investment you've made in the exempt market without even realizing. Um, any private investment is an investment made through the exempt market. So exempt market investments often include higher possible returns, but with the much higher risks that usually accompany them. Uh, and investments in the exempt market have many restrictions on their liquidity. Specifically, and by liquidity, we're talking about the ability to sell the investment. So you can't usually sell in the short to medium term your investments in the exempt market. And so the reason why that is because there is no formal secondary market. A stock market is itself a secondary market. The company sold their shares initially to the public as part of their initial public offering, and then the shares are available to be sold between investors back and forth. And that's why it's secondary. The primary market is from the company to the first investor, and then secondary market is between investors. With the exempt market, there is no formal secondary market that exists because there's no sort of governing body that reviews all the investments and makes sure there's a secure way for investors to trade them between each other. And so with that involved, it means that as an investor in something through the exempt market, your ability to sell your investment is quite restricted until that company you've invested in or that investment has a specific event that allows the sale of their investment. So what are some investments that you can make in the exempt market? So private real estate investments are one of the most popular. There's private real estate investment funds that you can invest in and sort of pool that will buy, properties or apartment buildings in different regions. Another really big one are resource companies. So gold or mining companies or oil and gas, they'll often raise money privately in the exempt market to get that capital for exploration and development of new mines or projects like that. And some other ones are hedge funds, which we've all heard of, but not all of us really know the details of. Essentially, hedge funds are very high risk investment funds, which can use sort of any investment at their disposal to try to make their returns. There's other types of private investment funds. Of course, there's equity crowdfunding, which is the newest addition to the exempt market, and that's what we do. And then, of course, there is venture capital funds or angel investing, which is part of the exempt market, but not require, it doesn't often require working with an exempt market dealer, and directly investing in a small business, also done and is part of the exempt market, but doesn't require an EMD. All of the previous options before venture capital funds and directly investing in a small business actually require an exempt market dealer, and we'll talk about why in the next slide. So what is an exempt market dealer? That's the real question of the presentation. If I wanted to be more clickbaity, I probably should have put the answer at the end of my presentation, but put it at the beginning. Essentially, an exempt market dealer is an organization licensed to sell only exempt market products to interested investors. It's also a fully registered securities dealer. So if you think about going to a bank and sitting down with your financial advisor, that individual is usually licensed, and that institution, that portion of the bank, is licensed to sell certain securities. They're selling mutual funds to you. You can't go and buy a mutual fund directly. You have to buy it through your financial advisor. They're also registered as a securities dealer, but for publicly available products, not exempt market products. So an exempt market dealer is similar, you can think of it at a high level as something similar to a financial advisor and, an investment firm who's licensed to sell investments in the exempt market. Because of the risks associated with the exempt market and private investments, typical investors cannot always invest directly in those products and companies. And so they usually need to work with an exempt market dealer to make sure that they are eligible to be investing in those products, and to make sure that those products are right and a safe fit for them. Also, on the company side, many companies seeking investment that are not public and have no interest in going public in the future, like those resource companies, are required to use an exempt market dealer in order to gain access to that pool of investors. There's several different types of licenses that firms can get in order to sell exempt market products to investors, but the largest one, the one that most use, is the exempt market dealer license. Investment dealers can also sometimes sell exempt market products, and mutual fund dealers, like the financial advisors we talked about, can only sell exempt products if they also have an EMD license. So most mutual fund dealers, through a bank or something like that, RBC, Scotiabank type deal, do not have an EMD license. So if you went to that financial advisor and you said, hey, where should I put my money? They're generally only going to offer to you products that they can sell. So they're not going to talk to you about those other options that exist outside of their license. So how do EMDs work, and sort of where do they fit? Just like other companies, exempt market dealers can specialize on certain market sectors. So you might choose to work with an exempt market dealer who focuses on companies only in the oil and gas industry, or real estate, or mining, or technology. And it's not just investors who work with EMDs. Lots of other organizations who are looking to invest their capital can work with EMDs. So large companies, institutional investors, accredited investors, and now the general public. But the general public can only work with an EMD if the EMD is operating an equity crowdfunding portal. You need special permission on top of your EMD license to operate an equity crowdfunding portal. And if you're not doing equity crowdfunding is the only exempt market product that is open to the general public. So if you were an EMD that was specializing in oil and gas, and you weren't doing an equity crowdfunding portal, you wouldn't be able to work with the general public. They wouldn't be considered eligible for those exempt market products. Private investments are still regulated. This is an important point that I wanted to mention as well. Oftentimes we think about, if you're running a business, and you've started it yourself and you have a few employees, you want to go out and raise capital, you think, okay, the public companies are heavily regulated. We know that they need audits and all kinds of stuff to be on the stock market, but all the other businesses, maybe you might think it's sort of, you can just kind of do whatever you want, but that's actually not correct. So investing in private companies and the operation of private companies and even seeking investment as a private company is still quite regulated. So there's a bunch of different legal doorways that companies can use to allow investment, and those are called prospectus exemptions. I made reference to the requirement of prospectus on the first slide. And so if you're not going to be going out with the prospectus, the government has created several different legal doorways that lets you sort of maneuver around the requirement for that prospectus, which, as I mentioned, are called prospectus exemptions. And exempt market dealers, their job is essentially to, among other things, to help companies determine which prospectus exemption best fits them for the goal of their raise, but also to make sure that investors are allowed to invest through whichever prospectus exemption the company is using. So it's about sort of matchmaking those with that legal doorway. So to expand a bit more on what exactly do exempt market dealers do, why do we care, why do we need them? Exempt market dealers fill several roles to protect and support both companies and investors. So we'll look at the protections for investors separately from the protection for companies, but also first I'll talk about the role specifically in facilitating the transaction. So exempt market dealers are a third party to facilitate the transaction between those two groups. So we ensure that the money is moved securely. We ensure that the money is going to the right place. We monitor the transaction and check the transaction for fraud, money laundering, and terrorist financing. And these are all requirements of EMDs. So we make sure that the transaction itself is secure and everyone is protected. On the investor side, we ensure that the investor is suitable for the investment that they're considering. So when you go and you talk to your financial advisor at the bank, they gather a bunch of information about you to make sure that they know what kind of investments are a good fit for you, and if the investments you're interested in actually make sense for what you're trying to do. Exempt market dealers are legally obligated to do the same thing. So if you're coming to an exempt market dealer, they have to make sure that, the exempt market dealer can only tell you about products that are a fit for you. And when you go to invest, that you are a fit for those investments, depending on your goals and your interests. EMDs also complete full background checks and due diligence on all the companies they offer for investment. That process is called Know Your Product, KYP, because the companies available for investment are essentially an investment product that the EMD is offering to investors. So the company, it's required for the EMD to make sure they understand clearly what they're exactly offering to those investors. EMDs also provide education and information about all the investments and their risks to the investors. So rather than being just a pure salesperson who's saying, this is super exciting, slaps the roof of the car and is like, this baby can do 100,000 miles and you never need to worry about anything breaking, we are legally obligated to tell you, yes, the potential for return, but especially the risks and the challenges there. There's all sorts of structure and policies and procedures in place to make sure that that education and communication with the investor comes first. So even though, yes, we are here and we're making the company available for investment, and that's how we make our money. We're in it to be a profitable business. A critical piece of that is protecting investors and only letting investors come through and invest if it really is a good fit for them. And then, of course, we make sure that the investments are made in a legal way. So if you're coming to invest your money, if you go through an EMD, that money is actually going to the company and the company is saying and doing what it actually says on the information that you're provided, and you are protected, and all the laws are being followed properly when you make your investment. EMDs also do a lot of work to help protect companies as well, companies raising capital. So we help companies understand the implications of raising capital. As I mentioned, there's a lot of different rules and prospectus exemptions that companies might not know about. So if you go out and try to raise capital and you don't know about these rules and you accidentally break one, you're still liable for breaking the rule. You can't plead innocence, and the OSC does not look fondly on that. So we're helpful in sort of letting you know what's possible and what's not under the rules. We also confirm the identity and do background checks on all the potential investors who might be coming into your business. Usually when companies are going out to raise capital, you're hoping to close an angel investor round. You've got 3 or 4 interested angel investors. Most people don't think about, necessarily doing a big background check into those angel investors. You're just excited. Hey, I've been out here working away for months and months trying to raise my 300,000 round. I finally got 3 people, 100,000 each. We're gonna get it done. It's important to make sure you know who your potential investors are, who's coming in, everything like that, especially if you do something like equity crowdfunding. And so, an EMD does all of that for you, so you can feel comfortable about who's investing in your business. We also can help companies determine which prospectus exemptions are there for the company to raise under, and which one is the right fit, and that the investment and the raise is done legally and in a safe way that protects the company. We also make sure that this benefits the investors and the companies. We make sure that the investors are suitable for their investments. And that sounds like something to protect investors, but given the way the rules are set up around the exempt market, if a company is going out and raising capital and they're allowing investors in who aren't really a good fit and shouldn't be investing, if the company's been doing sales and trying to encourage people to invest, it can actually be the company who's at fault for that. So the EMD, our role there is to make sure that only people who really should be investing are. And you never want to be in a situation where you accept money from an investor, you go off, you spend it, doing business development, whatever, and then you realize that, that investor actually mortgaged their house to give you that money, and they were really excited about what you're doing, but something's changed in their life and they really need the money back, but there's no way for you to give it to them, and you can get in this whole, difficult situation with everyone being unhappy. And so the EMD's role is to make sure that the investor has that time to sort of slow down, think twice. And the EMD really asks those questions to make sure, okay, you shouldn't be taking out a massive line of credit and putting your house on the line to invest in one company, because, that's not necessarily a good fit and good financial planning. So we're there to make sure that that goes down in a way that's supportive for everyone. And of course, the EMD also gives companies access to investors that they might not have access to otherwise. There's a variety of different ways of doing that, but obviously with equity crowdfunding, suddenly now individuals who wouldn't be legally able to directly invest in the company now can. So your greater community and things like that. So who are some people who would work at an EMD? How does it work internally? What are the employee roles? So the first role, sort of the role you would probably come across the most frequently, is that of a dealing representative. So a dealing representative is essentially the equivalent of a financial advisor at a bank. So this individual is responsible for working with investors to get to know them, understand their financial situation, determine their fit and suitability for the different investments that the EMD has. And they really need to make sure that they understand the companies well, so that when they're having those discussions with the investors, they really know the ins and outs of everything. They're the individual who most investors would interact with at an EMD. If someone is giving you, financial advice or anything like that at an EMD, they need to be a dealing representative. There's special requirements to become a dealing representative that I'll talk about on the next slide. But dealing representative is essentially like a financial advisor. The next important role would be the chief compliance officer. So this individual is responsible for ensuring compliance of the EMD and its employees with all of the rules and regulations set out by the government, the securities commissions, everything like that. And therefore, they're also responsible for ensuring a compliant management process. So the internal workings of the EMD, they have to make sure that they're being done properly and people are following those rules. Lastly, the ultimate designated person, the UDP. This is usually the same person as the CEO of the company. And this individual is held legally responsible for the actions of the firm and its employees, and is also responsible for remaining compliant with regulatory requirements. This is an interesting role to sort of talk about, because if you think about the way a company normally works, the idea is a little bit that you're getting incorporated to create a new legal entity that sort of separates the corporation from its founders and its employees. And so if you think about, the United States, if you think about 2008, all those companies, that made questionable financial decisions that led to the financial crisis, the majority of their CEOs were not really punished. And it's because the company was deemed to be at fault, not the CEO who sort of made all the decisions. With an EMD, that's actually sort of the opposite. So the UDP is an individual who is held personally accountable for the actions of the firm. So no matter what, like if something's going down and the UDP is in charge and leading that, the UDP can't just pass that legal liability onto the company itself and say, oh, I was doing what my shareholders demanded. I'm so sorry. It's not my fault. They have to take that responsibility, and there's specific fines and jail time and all sorts of things for different infractions that would be passed on to the UDP. For your information, I am the UDP of Equivesto. What are some requirements for an EMD? So we've talked about, what an EMD does, why it's useful, who works at an EMD, but what are actually the details? Like, what is an EMD doing to protect investors? Like, what are the actual things? I've said that they protect investors, but let's break down what an EMD has to actually do to operate as an EMD. So exempt market dealers are subject to full dealer registration and compliance requirements and are regulated by provincial securities commissions. So in Canada, each province or territory has its own securities commission. There isn't one overall Canada-wide securities commission like the SEC in the United States. So there's one for each province. And so if you're getting licensed, you have to be licensed in every single province. Equivesto, we happen to be licensed in 4 provinces: Ontario, British Columbia, Alberta, and Nova Scotia. But we're regulated by all 4 different securities commissions. One of the first requirements for an EMD and its employees is educational proficiency. So individuals in different roles have to pass certain exams tied to those roles and experience requirements tied to those roles in order to even have those positions. So when, and I'll talk about this a bit more later, but essentially when a company is going to apply to become an exempt market dealer, the company cannot get that EMD license without also having at least a certain number of individuals filling these specific roles that are approved. So for example, if you went forward and you said, okay, this person's going to be my chief compliance officer, and the Ontario Securities Commission said, oh, no, I don't like them as your chief compliance officer, they wouldn't also give you your EMD license and then say, just give me another chief compliance officer. They would say, your whole application is denied. Come back with some other chief compliance officer. So some of the courses, however, that are involved with those different roles are the Exempt Market Proficiency exam, which is a role required for anyone who's going to be a dealing rep. This is a course run by the IFSC or other sort of professional course bodies. And it's about, as the name implies, being proficient in the exempt market and exempt market products. There's a special course for chief compliance officers. There's also a partners, directors, and senior officers exam that anyone in a leadership position has to take. And then, as I mentioned, the regulator also has to make sure that the person is a fit for the role. And so even if you meet all the requirements on paper, let's say I'm applying to be, a dealing rep and I've passed the EMP, if the regulator looks at my history, my conduct, and they say, you know what, I don't think you'd make a good dealing rep, they can say no. It's entirely at their discretion. So what are some other requirements for EMDs? Another very critical one is around capital and solvency, making sure that the EMD itself as a business has enough cash on hand for any capital that they're holding for investors and also for themselves, so that at no point will they run out of cash or stop functioning and put investors or the companies raising capital at risk. So there's a specific working capital calculation that has to be done on a daily basis. And if that's breached, if those requirements are breached, the company has to inform the regulators immediately and fix them within 24 hours, or your license can be suspended. The minimum cash requirements change based on different scenarios and how much assets you're holding of different clients, but the minimum requirement is at least $50,000 Canadian in excess working capital. So if you're holding $1 million of clients' assets, in cash, you still need to have an additional $50,000 in cash of excess working capital, in addition to any money you've put aside as counter payments for insurance or anything like that. You need an additional 50,000 always available. Another requirement is insurance. So EMDs have to carry a variety of different insurance coverages at all times to protect themselves and their clients. There's about 2 or 3 different types of insurance that has to be carried at all times in order to have an EMD license. EMDs also need to provide audited financial statements on an annual basis to the regulators within 90 days of the fiscal year end. So they have to undergo a full audit by a third-party accounting firm and provide that audit to the regulators. Our year end has just passed, so Equivesto is undergoing our 3rd or 4th audit so far. It's always a good time hanging out with the auditors. We've never had any negative findings, so that's good. Another EMD requirement is called Know Your Client. So EMDs are required to take the time to get to know all of their investors, clients, and understand their financial situation in order to match them with the right investment products and to ensure that the investor is qualified to make the investment. I've talked about these legal doorways called prospectus exemptions a few times. Prospectus exemptions also say which types of investors are allowed to invest through that legal doorway. And so as an EMD, we have to make sure that if an investor is looking to invest in that company through that doorway, even if they're a good fit, we also have to make sure that they're qualified to use that doorway. EMDs also do know your product. So I made reference to this a bit earlier, but understanding the details of every investment product offered by the EMD, including the risks and challenges of investing, and that's full due diligence on every single company. So that all has to be done and prepared before the company can be offered by the EMD, and anyone who's speaking to an investor about any of the products needs to fully understand the details of that product. Another requirement is around trade suitability. So EMDs are required to make sure that every investment that takes place is a correct match between the investment product offered and the investors, and investors have to be suitable for each product that they invest in. EMDs are also required to maintain complex compliance system. EMDs have to maintain the robust compliance system, and we have to ensure that we follow all of the regulator requirements related to that compliance system. There's requirements around document storage, company procedures, cross-checks, reporting. They all have to be clearly documented and followed by employees. Usually, EMDs prepare a sort of a large document called a policies and procedures document, which outlines all of the rules of what an EMD is going to do, how it's going to run its business, what happens in every different possible scenario. And that sort of is essentially the Bible, or that core document that all the employees have to follow. And the EMD will provide that to the regulator, and the regulator will use that to determine whether they feel there is adequate compliance systems and things like that in place. And it's the UDP and the CCO's job to ensure that everybody follows that document. There's also some EMD requirements around record keeping. So EMDs must keep detailed records of all transactions, paperwork, correspondence, and internal documents for at least 7 years. So if a client is emailing with questions or asking me how my day is, I have to keep that information for 7 years to protect that same client. If there's ever a situation where there's something has gone wrong and the client's complaining, we have to make sure that all of those records are kept so that we can hand that forward as part of any investigation to say, look, we can see this is exactly what happened. We have all the records. We can't go around deleting records or anything like that. And client statements. So EMD must maintain detailed records of what the client has done and be able to provide statements, just like financial statements from an investment portfolio, to clients upon their request and annually. And we have to provide access to the regulators for client records whenever they want. We also, I know this is a lot of requirements. We also have to complete trade confirmations. So we have to review each trade, track the money, make sure it goes to the right place, and provide confirmation to all parties. And we have to disclose if there are any conflicts of interest or referral arrangements. So if I'm, getting a sort of a secondary payment for referring you to a certain company or something like that, I need to make sure that that's clearly disclosed to investors and companies that are participating, so everyone knows what's going on and people can make informed decisions. Okay, that was a very long list of requirements, but that part is over. The last thing we're going to talk about quite quickly is how does a company become an EMD? This is not a full list. It's a very shortened summary, but at least gives you a sort of outline of what kind of takes place. So the first thing is to be and act as an EMD, you need to get licensed as an EMD, and you have to be registered with one or more provincial securities regulators. So again, there's one for each province. Every province you want to operate in. So every location of an investor where you want to take money from that investor, you need to be licensed. So as I mentioned, Equivesto is licensed in 4 provinces: Ontario, BC, Alberta, and Nova Scotia. If an investor from Saskatchewan wants to come on the platform and invest, I can't take their money because we are not licensed in Saskatchewan. In order to apply to the regulator and get registered, there's a full outline of what's required to become an EMD in a legal document prepared by the regulators called National Instrument 31103. I'm not going to talk about what those sort of are, but when you see national instrument, that clearly says that it's national, so that lets you know that the rules and requirements are the same across all of the provinces. It's a national one as opposed to a multilateral instrument, which might be only for 1 or 2 provinces. In order for a company to register as an EMD, as I mentioned a little bit earlier when talking about the employees, you also have to, at the same time, bring for registration a chief compliance officer, ultimate designated person, and 1 or more dealing representatives. So those people also have to apply at the same time as the company. The company has to ensure that they're compliant and meet the requirements fully outlined when I listed all those different requirements. And usually that's demonstrated through a detailed policies and procedures document, which is enforced by the UDP and the CCO. And you have to prepare a very, very long application form called Form 33109F6, which is like probably over 100 and something pages, outlining all the different things. And then you attach all of your supporting documents, and then you send that to the regulator. And then the regulator slowly reviews the application. It's a maybe months or occasionally years long process, which will include several in-person and phone interviews. Anyone who's actually going to apply to become an EMD, we highly, highly recommend that you work through the entire process with a law firm that knows the process of getting registered properly, they can really help shepherd you through that and make the process much easier. Of course, that will be additionally expensive, probably between $10,000 and $20,000 in legal fees, but I highly recommend that for anyone who wants to become an EMD. It makes it much easier. But that is the end of the what is an exempt market dealer presentation. Hopefully it hasn't been too dry, but if you want to learn more, you can visit equivesto.com/learn, or you can look at the Private Capital Markets Association website, pcmacanada.com. And now I would be happy to answer all of your questions in the chat.
Yeah, we do have a couple. That was great, Alex. Thank you very much. What crowdfunding options are there for someone that wants to start an investment fund that only buys and sells securities with investors' money and does not sell products and or services like traditional businesses?
If you're interested in starting an investment fund that takes money from investors, there's all sorts of requirements. First of all, you can't crowdfund to start a fund. Equity crowdfunding is a nice umbrella term that refers to many of those different doorways that I talked about. So there actually are some doorways that can make it available to the general public through equity crowdfunding to raise money for investment funds. But for a company to invest under that and to raise capital through that, they already need to be registered as a fund. So I would say before doing any of that, you need to step back and go and research the legal requirements to start a fund, which can be somewhat onerous. So definitely take the time to go and research that. Then you could come back and talk to us, because there's even additional requirements for the type of equity crowdfunding that could allow a fund.
What forms can the deals take? Equity, loans, royalty? What other forms are there?
So that's a rather broad question. Again, it depends on the legal doorway that you're going to use. The safest thing to assume is with equity crowdfunding, you can do either debt or equity. If it's equity, it needs to be common or preferred shares, or a security that is convertible into a common or preferred share. So you could equity crowdfund a warrant if the warrant converted into a common or preferred share.
So I get approached by people in our community all the time that want to connect startups with funders, and they want to take a little piece in the middle. There's a lot of people who are in the startup area to try and take a piece of whatever gets funded in various aspects. You know, I've no pitch coaches who do this kind of thing. I know the
Right.
other. Can you tell me a little bit about what the legalities around that, and how do I know if I'm working with someone who's legit or not?
Yeah, so I'm going to be really blunt. If someone's taking a percentage of your raise and they're not a dealing representative with a licensed exempt market dealer, what they're doing is illegal. They cannot do that. You can't take a percentage of a future raise from other investors. You can't broker a deal without being licensed. And so there's lots of people that like to say that they're doing that, and they're very small. So they're not, the OSC doesn't know about them and they're not getting chased. But from a legal perspective, it's not gray. It's not whatever. It's quite clear. You can choose to work with whoever you want, but it's important that you know what you're getting into when you do that. And so I would definitely say if you're talking to someone, you can ask them, oh, are you licensed as a dealing rep with an exempt market dealer? The answer will probably be no, they're not. But if you feel awkward asking them, you can actually look them up. There's a government website where you can go and look up the name or firm of anyone who's licensed with the regulators, see their license and see what they're registered as.
Well, we really appreciate you taking the time to share your expertise with us today. If people want to find out more about you and Equivesto, where would they go?
Thanks, Craig. Yeah, it was great being here. To find out more about me, you can look me up on LinkedIn, Alexander Morsink, or you can head over to equivesto.com/learn. We've actually just rolled out a fantastic new investor masterclass. It's 7 different videos that really give you the rundown on how to be an investor, the information you need, and all sorts of stuff. So I would definitely recommend checking that out.
Thank you for taking the time. Thank you, everyone, for joining us, and we'll see you all again soon.
Thank you.